Hello everyone and welcome back to my channel. As of every week, we will jump into the fundamentals, sentiment and technical analysis of different currency pairs and look for opportunities during the next week. First of all, starting with the fundamental strategy, we still have the Japanese yen as the strongest, US dollar also very strong, CAD is very weak, Swiss franc is very weak, and New Zealand dollar is having a lot of weakness. Now, the euro, as you can see, is picking up. So, from a fundamental point of view, the Euro USD is not a good idea to sell anymore. So now we are looking into different currency pairs that are taking now the field and the rumor rather than the Euro USD. We will start with the Swiss Japanese yen and the New Zealand dollar Japanese yen currency pairs. Then we will look into the USD CHF and USD CAD to see which opportunities we might have during the next week, and also I will go into a trade that I took that I am still in, the idea behind the trade, why I entered during this time, and what is the projection of this trade. So first we will start with this pair and we will go over the trade, then we will jump into the NSD JPY, USD CHF and USD CAD and USD NSD. Let's start with the CHF JPY from a technical standpoint, because fundamentally CHF JPY is a sell position. Coming right here, this is the CHF JPY trade that I am still currently in. Let's start from a daily perspective. We had this supply zone right here. We had the moving averages, and during this time the RSI was at the middle and above its moving average. So from a technical standpoint, it was a great idea to take a sell position in this zone. Then we need confluence, fundamental confluence or sentiment confluence to take the position. And right here we can see that this is the balance of trade, this is the actual, and this is the forecast. So it was a great idea right here to take a sell position, but we need confirmation from technical standpoint. So what I did, I waited a 1 hour break of structure to the downside and I immediately entered with the stop loss above this high and above a little bit, because it might go up, grab liquidity and then continue pushing down. So I needed some room for the price to breathe if it needs a retracement. This is the first point. The second point is that there was inflation rate data coming right here, plus the Bank of Japan decision of interest rate. So if I didn't have great probability that the Bank of Japan will hike interest rate and the inflation rate will come higher than expected, I wouldn't have entered the trade at the balance of trade data. I would have waited to see the huge impact data, CPI and Bank of Japan interest rate decisions, to take a short position after the data comes out. But how did I have confluence that the inflation rate will come above expected and the Bank of Japan will highly increase interest rate to 0.5%? If we come into the fundamental analysis strategy, right here I have a table of forecast deviation analysis. And if we come into the Japanese yen, data was coming higher than expected very, uh, very often. So what I did, I took this probability that the sentiment is very positive for the Japanese yen, and there is a high probability that the Bank of Japan will hike interest rate because data is not even coming as expected, and they wanted to hike interest rate. It was coming better than expected, so it had a higher confluence that the Bank of Japan will hike interest rate, and this was the idea behind this trade. Now, why I like a lot the CHF Japanese yen trade? First of all, technically it's very beautiful, and now from a sentiment standpoint and fundamental standpoint, the price should go to the downside. Also, if we come right here, just the second ranking, the Japanese yen is very powerful against the Swiss franc. What I mean by this is that the inflation rate for the Japanese yen is very much higher than the Swiss franc. The unemployment rate in the Japanese yen is much likely like the Swiss franc, but we have the interest rate of Japanese yen is equal now to the interest rate of the Swiss franc. So there is no interest rate differentials like, let's say, the New Zealand dollar and Japanese yen. This interest rate differentials might make it harder for price to push lower, because there is something called carry trades where it's highly reliable on the interest rate differentials of different central banks. And this is not happening with the Japanese yen, Swiss franc, although they are both safe haven currencies. But right now, this trade is a very good idea and very good opportunity to ride the wave for approximately 1 year and 2 years. And hopefully, during this analysis, if we see a push to the downside, then retracement to this area, I will add to my position. Why? Because fundamentally I am still bearish and I'm looking to add sell positions for the long term whenever the sentiment is right, is on the right track, and there is data that supports this trade idea. I will be taking it. Also, I took the same trade on my FTMO account, but I close it on 1-to-1 because I cannot hold trades in my FTMO account because it's not a swing trading account, it's a normal account. So I just wait news, I take 1-to-1 risk to reward ratio, and that's it during the day where there is confluence, daily confluence and data confluence. Now let's jump into the New Zealand dollar Japanese yen. This trade, this pair, I'm also looking to sell it, but it's a little bit trickier because, as you can see, we are in a consolidation right now. We have right here a support zone. So this is resistance zone, but I would like for price to come into the moving averages, into this area right here, where it hits this supply zone, or come into this resistance area. We shall see what will happen with the New Zealand dollar, but I would like for price to come into these highs right here on the RSI, come into the moving averages, hopefully for the 200 moving average, with the right data, with the right sentiment and economic data. If it aligns with the sell of New Zealand dollar Japanese yen, I will be taking also a short position on this pair. Now let's jump into USD CHF. USD CHF is still at the highs. I am waiting for retracement into this demand zone, and hopefully like in a week or two, price will come to the downside and this moving average will pick up and the RSI will come much lower, so it will be a good opportunity to keep buying the US dollar. Now, for this to happen, we need to check the economic calendar for the next week and see which days there is Swiss franc data or US data. So we have the consumer confidence, and also we have the Federal's fund rate, FOMC statement. We have trade balance for the New Zealand dollar, also unemployment claims, advanced GDP, and core PCE and employment cost index. So there is good news to see if we buy or sell the US dollar against the New Zealand dollar. But even if sentiment picks up to the upside, technically we are overextended, so I will not be looking to buy the US dollar from this demand zone. I needed to retrace a little bit more for me to have a good price on this pair to take a long position, and hopefully this long position will not stop until Donald Trump stops and go away from the presidency, or it keeps moving higher because Donald Trump's data is a little bit inflationary, so interest rates might rebuild up to the upside, inflation might pick up to the upside, and the US dollar will keep appreciating because interest rate will follow inflation. So there will be a lot of interest rate hikes. So USD Swiss franc is a very good idea to take a long position as long as we retrace into a good placement where it is near the moving averages and into a demand zone. Then we need to wait for the right data to come up in order for us to take a trade like this. Whether it is a winning trade or a losing trade, I'm just trying to build my portfolio, take the right positions, and hopefully hold it for 3 months into 1 year. So it will be a yearly trades ideas. Also, coming into the NSD USD, also I am looking for this pair to retrace a little bit. We have here a great area of supply. Also we have a great area of consolidation plus the moving averages. So in 2 weeks this pair should pick up to the upside. Even if sentiment pushes it down to the downside, I will not be taking a position in this area because we are overextended from the moving average. If we don't have opportunities on USD CHF or NSD USD, I will be looking for different pairs to trade and take positions on, as long as fundamental trends are very clear and sharp. So these are the 4 pairs that I'm looking for right now coming into the next week. Hopefully I will have an opportunity coming into the markets next week, either scalping or swing trading. Always I will wait for the right data to take the right decisions. This is everything for this week. Hopefully it was insightful. If you like this type of content, don't forget to hit the like button and subscribe for weekly analysis like this. Until the next video, stay safe.